backdrop, let's check out what brokerages are actually betting on right now. Which are the sectors, according to them, that will stand to gain and in fact look attractive at this point in time. Ashesha is here with all of those details. Ashesha, you have done all the number crunching and you've gone through all the data when it comes to what brokerages are expecting. What are they throwing up?
Well, absolutely. Budget is round the corner, and here's how brokerage houses are positioning themselves ahead of the big event next week. First up, let's talk about Citi, where they expect markets to consolidate ahead of the big event. In fact, they say that every dip in the Indian market will be a buying opportunity, and they've given a nifty target of 24,400 for June 2025, which of course is much below the current market prices, especially after the run-up that we have seen in today's trading session. So they say they are overweight PSU utilities and PSU defense, industrials, banks and insurance. And on the flip side, they are underweight consumer discretionary, IT services and metal sector. So that's the view as far as Citi is concerned. Let's move on and let's also talk about what Morgan Stanley has to say on budget expectations. They say that markets are approaching budget with exuberance. They see volatility and correction post-budget. As far as sectoral expectations are concerned, Morgan Stanley says that they are overweight financials, industrials, consumer discretionary and IT sector. So IT is where they are overweight on, and they say they are underweight all other sectors except these four. Moving on to what other brokerage houses have to say, let's shift the spotlight to Jefferies then. Personal income tax exemption and increase in rebate is what brokerage houses are expecting. So Jefferies says the tax cut will impact a whole host of individual stocks, the likes of Hunasa Consumer, Trent, Reliance Industries, Bharti Airtel, Jubilant Foodworks, Zomato and so on and so forth. They also is positive for a whole host of companies, the likes of Aavas Financiers, Home First Finance, Macrotech Developers and Suntech Realty. Moving on to CapEx then, that is going to be a big focus area for the government this time around yet again, and L&D will be a big beneficiary of that move. Apart from that, boost to rural infra and welfare schemes will be a positive for a whole host of companies, the likes of TVS Motors, Hero MotoCorp, M&M and HUL. We also expect some changes with respect to tobacco taxation, and that of course will have an impact on ITC as well. Let's also talk about Nuvama and what they expect. They say they expect rural boost, and on account of this, they prefer consumption over capex theme. They prefer private banks over public sector banks, and they also say that they are preferring IT and pharma over domestic cyclicals. Lastly, let's talk about JM Financials, where they say that they are preferring FMCG, housing finance companies and capital goods companies. So yes, across the board, given the exuberance that we have seen in the market ahead of the budget, consensus expectation is that perhaps market could consolidate going forward, but housing finance companies, capital goods, FMCG is where all brokerages are bullish.
Yeah, Shesha, thank you so much.
If you like this video, then like, share and subscribe to ET Now.